What's going on, guys? So today we're going to talk about risk to reward. Now, why is risk to reward such a big topic? I feel like so many people tend to overestimate or underlook what exactly is going on when you're risking something in Forex or cryptocurrency, or when you're trading just in general, and what your reward is. Some people have some really bad risk to rewards ratios, like 1 to 1 or 1 to 2. And I'll give you guys an example on how that is, or what is the difference between 1 to 1 and 1 to 3 risk to reward ratio. Basically, think of it like this real quick, guys. Think of trading as based off of probabilities. And every single chance that you can increase your chances of winning in terms of having the probabilities in your favor is for the better. You never want to have the probabilities ever go against you. So when you're trading 1 to 1, risk to reward, all you're doing is you're setting yourself up for failure. Now, what is 1 to 1 risk to reward? That is, let's say if I'm looking at a chart right now and I'm risking and I'm entering around this zone, right? Around this horizontal line, that is me risking, let's say potentially my stop loss is around this area, 50 pips, right? To catch 50 pips. You see what I'm saying? That is not the best risk to reward ratio in trading strategy, because now you're going half and half. You're almost gambling at that point. So what you're going to want to look for, especially on the higher time frames or on the lower time frames, is a strategy that's going to help you guys earn and make more money in the long term. And that's why I like to use 1 to 3 risk to reward ratio. Right? If our entry was right here, right, and we were risking 50 pips, for 50 pips, we're basically gambling. That's 1 to 1. Now, if we were risking, let's say, 50 pips to potentially make 100 pips, right? That's like, let's say, 1 to 2 risk to reward. Or if we were risking, let's say, 50 pips to potentially make 150 pips. Right now, we're thinking smarter. We're thinking 1 to 3 risk to reward ratio. Now, why is this powerful? Because with 1 to 3 risk to reward ratio, right, you can lose 60% of your trades, and still be a profitable trader. You could still be a profitable trader if you lose 60% of your trades, which seems out of this world. It sounds crazy, right? In school, if you only, got if you only got 30% of the answers on the questions on your sheet, you would fail. But here we could help you become profitable by only having 30% of your trades, right, be profitable. Okay, so I'm going to explain exactly how to do this. So let's say if I had $1,000 account, whether it's $1,000, $100, $500, try to keep the same type of management, right? And my goal was to catch 50 to 60 pips a day. So hypothetically, right, I like to say 50 to 60 pips a day keeps the 9 to 5 away. Now, let's say if we were trading Euro USD and I was risking, right, a 0.01. 0.1, right? And my stop loss for the entry, and I was selling Euro USD, right? I was selling Euro USD, and my stop loss was, let's say, 20 pips. And my take profit from entry was 60 pips. See what I'm doing there? So 20 pip stop loss, 60 pip profit, right? And like, let's just say I lost this trade. So if I lost this trade, I would be down 20 pips. So if I were to lose $20 on this trade, let's say I see another trade setup. It's AUD USD. Now, if I see AUD USD, let's say I'm using the same risk to reward, and same risk management. So I'm risking, let's say, a 0.01 on this trade, right? And let's say I'm selling AUD USD. And then at that point in time, my stop loss from that area zone is about 20 pips. 20 pips, right? And my take profit is about 60 pips. So if it's about 60 pips, and let's say with this trade, I also lose this trade, right? Lost trade. So I'm now down another 20 pips, right? I'm now down another 20 pips on trades, on this trade. And I'm also down $20. So now my account is running negative. Now I'm down about $40 in total on my $1,000 account, right? But you know what I'm saying? This is why 1 to 3 risk reward is so powerful, because watch what happens here. Let's say we get to the next trade setup and it's Let's say it's something as simple as GBP, right, JPY, right? And I get into GBP JPY for a buy. Now, if I get into GBP JPY for a buy, right, I'm going to be risking the same amount, right, at 0.01, but my stop loss is going to stay the same. Stop loss is 20 pips, right, 20 pips, and then my take profit would be about 60 pips. So if my take profit is about 60 pips, let's say I win this trade. So I now eliminate all my losses and I'm plus 60 pips in this trade. And because of that reason, right, I'm also up $60 in total from this trade. So because I'm up $60 in total for this trade for the day, I am currently up $20, which is 20 pips for the day. So this is why 1 to 3 risk to reward is so powerful, because imagine if, you know, I had one of my worst days trading that day and I honestly lost 2 out of 3 of my trades. I still became profitable, rather than me going out there and over leveraging on certain different types of trade, not understanding my risk to reward ratios, right? And I would take that as a losing day rather than a winning day, right? Imagine if it was a great day. You know, if it was a great day, then I would double down on both of this. I would end up with 120 pips in profit and only a smaller loss right here, right? So you guys got over 100 pip profit with only a smaller loss on this area. So you guys got to understand that when you're taking trades, try to understand what the risk to reward is. Are you guys risking, right, 20 pips, right, 1 to 3? Are you risking 10 pips for 30 pips, 100 pips for 300 pips? The better the risk to reward, the better your chances of you going out there and just becoming a profitable trader long term. You know, this is a really good tool when you're utilizing, obviously, TradingView, and just overall understanding it, that guys, like, the best way to be a winner in trading is when you have the largest risk to reward ratio, right? If I were to get involved in this trade, I would look for an entry right around this zone, right? I would have my stop loss be around the other high, right? Maybe around this zone. And then I would also have my TP right around here. You know, my risk to reward is 1 to 5. So you see what I'm saying, guys? Like, you want to keep your risk to reward at an all-time high. Never take trades that are 1 to 1. Always take 1 to 2. If you can, for better shot, 1 to 3. And this is what's going to help you just in the long term when it comes to trading, when it comes to compounding and building your account. Because like I said, we want the odds to go all in your favor, never against you guys. So I want to thank you for watching this video, and I'll see you guys on the next one. Peace.